just give us an update about the recent 14th African Securities Exchange Association Summit that took place in Lusaka.
Essentially, they generally have it as an annual meeting, and this year the theme was integrating the markets through technology. So they had various speakers speaking on that topic, and they were just looking at what, there was an overview of where they've gone in terms of integrating the markets and what would be the best way forward in terms of.
So in terms of that evaluation, how far have we come? Because we know that, for instance, in East Africa, they've taken great strides to try to introduce automated systems. But the challenge across Africa is that each country seems to run on a different trading platform, and that creates a disconnect.
I think you're right. A lot of the markets have gone electronic now, but as you say, you'll find that regions may run different systems. For instance, SADC may be heavily weighted towards the Mauritian system or the JSE system, whereas East Africa runs on its own platform. So again, which is in terms of this conference, they're looking at ways perhaps of making, as opposed to using one system, just having a way that the systems can actually speak to each other through some sort of adaptability, as opposed to going onto one single platform.
Some people say yes, improving on the technology is important because it reduces the transaction and the clearing process time, but what really Africa should be focused on is deepening capital markets, trying to get more local companies to list, trying to get more money flowing within the system. Is this issue being addressed adequately?
Yes, I think it is. I think obviously education of African entrepreneurs on the benefits of listing is key, and I think certainly the view at the conference was that while technology forms a part, there's no point having the best technology in the world if there aren't actually any stocks to trade. There needs to be a process to help generate liquidity and add more listings to the markets.
What about building on relationships between the various components of the trade? So it's the equities, for instance, that are being traded, but it's also the fund managers who are channeling the funds of investors. In some countries, we're told that the skills base in this regard is really, really weak.
In terms of channeling? In
terms of setting up more fund management companies and entities to try to direct investments through the exchanges?
No, I think you'll find a lot of the life insurance companies, for example, have got in-house fund management companies. So I think skills are there. In a lot of the markets, your institutional investors do hold, say, over 60% of the listed equities, and so I think the skills are there. But as you said, the issue may be more mobilizing funds from the retail market, and also we've seen a lot of pension fund reform, which has also helped to bring more money into the market.
Let's talk about regulatory differences. I mean, we do have variations in exchange controls in Africa, which is one issue, and then there's also different takes within emerging markets in general about how you treat portfolio flows. I mean, there's lots of talk of tax them, for instance, and that's very unattractive. So what's the system generally like?
Generally, you find there aren't exchange controls across most of the markets, so funds flowing in and out isn't an issue. However, a lot of the markets will have, for example, foreign ownership limits. So I think Tanzania is at 60%, of which most of the companies have already reached that limit. So then you have additional restrictions in terms of if you're selling as a local, you first have to sell to a local investor before you can sell to a foreign investor, and if the limit is reached, you can't sell to a foreign investor. So it's just those kind of issues I think that will also need to be worked around.
Consolidation of existing exchanges or integration? And here I'm talking about the fact that we've got in West Africa the BRVM, which is an amalgamation of about 8 francophone countries, and it seems to work really well as in terms of its being a prototype. Should we be looking at regional integration first before we talk about a single Pan-African exchange?
Certainly, I think so. I think we'll probably see regional currencies before we see Pan-African currencies. So just in terms of settlement and that sort of thing, I think definitely we should be looking at regional exchanges first, which it seems to be that the way they're going. We've got that East African market. There's the BRVM, which, whilst it's a good prototype, it excludes Nigeria, which is the biggest market in West Africa. Right. So I think there's still quite a long way to go. But the SADC region is also looking at a regional prototype. So. I think that is definitely the way to go.
Let's talk about that issue in SADC, because Nigeria, being the largest economy in West Africa, is not part of the BRVM, and that's a disconnect. The JSE, the most capitalized of all the exchanges in Africa, the largest, one of the largest within the emerging market space, and people are very, very skeptical about being swallowed up by the JSE. A deal fell through in Mauritius, for instance. The JSE's launched a secondary platform in the form of an Africa board, but we're not really seeing the uptake from African companies, regulatory issues around dual listings, but also the sense that companies outside of South Africa or these big markets are too small to be able to participate in a structure like the JSE, for instance, or any kind of amalgam. How do we overcome those?
That is one of the challenges, which I think goes back to the point you're making, that maybe the approach should be to first deepen these local markets before having a consolidated African board, because as you say, the markets will become skewed towards the JSE. For example, if I think 75% of the market cap of Africa at the moment is the JSE, Egypt and Nigeria. So that's again something that will need to be looked at further.
And let's talk about the benefits of creating a single exchange if ever we were to get there.
Benefits, in theory: increased liquidity, single access point for investors, easy transfer of shares, hopefully across borders. I think those would be the main benefits.